Dear companions, friends, and colleagues, I regret to inform you that the technical issues with my computer have not been fully resolved, compounded by the lamentable state of the internet in Iran. Nevertheless, I am committed to persevering and delivering content to the best of my ability under the prevailing circumstances, aiming to remain at your service. I am pleased to present the top 10 financial markets for Monday, October the 14th, 2024, as determined by Elliott Wave Analysis. I trust that you will find this information valuable and enjoyable. Let's analyze the weekly chart of the euro and US dollar. Based on the current structure, it seems that there is a diagonal leading wave pattern in a larger degree, followed by a bear market price action resembling a zigzag. This triple pattern suggests the expectation of 3 correction waves within the bull market, with retracement levels between 50% and 78.6%. Since this analysis is on a weekly time frame, it may take some time to complete. After this, we can expect a wave in the bear market to complete a larger zigzag pattern. On the daily chart, we can observe a wave A or 1, which represents an impulse pattern, followed by an expanded flat pattern completing wave B or 2. This should ultimately lead to a 5-wave pattern. The current price action could be part of a leading diagonal, completing wave 4 of this pattern within a specific range without extending beyond wave 2, before witnessing price action in the bull market to reach its target. Alternatively, the second idea suggests that wave A or 1 is an impulse pattern, similar to the first idea, but wave B or the second of may form a sideways pattern. We can delve into this idea further on the 4-hour chart. To summarize, wave A or W represents a multiple zigzag, and wave B or X is a double zigzag. Any type of corrective pattern currently in progress should end within the specified range without invalidating the analysis. This will lead to the completion of the bearish market pattern and reaching the set targets. We are analyzing the pound and US dollar on a weekly chart. For the bigger wave W, we see a zigzag pattern, and within the same wave, wave X also forms a simple zigzag pattern. Following this, a diagonal leading pattern completes wave A, as per Ralph Nelson Elliott's theory of 5 waves. According to this theory, 3 correction waves should follow. Therefore, we anticipate a positive trend in the pound as part of a bull market. Looking at the daily chart, we observe an impulse pattern forming wave A or 1. Subsequently, 3 corrective waves complete wave B or 2. After this, we see a 1 and 2, and 1 and 2 pattern, which suggests that the second cycle should form 3 correction waves, and establish a new price action in the bull market within the specified range. Crossing the market price peak, and the formation of any correction pattern, could confirm reaching certain targets. Moving to the 4-hour time frame, we notice an impulse pattern forming the first wave to a larger degree, followed by a simple or double zigzag pattern completing the second wave. The next price action is considered a diagonal leading pattern. The second wave, currently in formation, seems to be a zigzag pattern. Subsequently, we anticipate another impulse pattern, ensuring that it does not move beyond the beginning of wave 1. Another perspective is that the first wave or 1 appears as an impulse pattern, and to a greater degree, wave B forms a lateral correction pattern with 3 downward and 3 upward waves, progressing by 123.6% compared to wave A. Any corrective pattern should conclude within the specified range, leading to price action in the bear market to achieve the set targets, and complete a sideways corrective pattern for wave B or 2, on a larger scale. In the Nikkei 225 weekly chart, the first wave is larger, and the extension of the third wave has advanced 161.8% compared to the first wave. After that, the 3-wave pattern occurred between 38.2% and 50% of the third wave. The question is whether the fourth wave is complete, or if it could become more complicated. Assuming it is completed, it should reach the specified targets after the market price peak breaks. Let's go to the 4-hour chart to take a closer look. First, I will label, and then I will give the necessary explanation. With the view that the fourth wave is completed, the current price action can be considered as 2 types of patterns. Could be a leading diagonal pattern, which should form a corrective pattern after reaching the first target, and then extend to reach the mentioned targets. It can also be a 1 and 2, and 1 and 2 pattern, that should not go beyond the beginning of the wave of the second cycle and witness price action, and progress in the bull market. Otherwise, it may be a simple zigzag pattern, and we are witnessing to price actions in a bear market. Let's analyze the DAX market using the daily chart. The first and second waves are clearly at a greater degree, but the third wave is completing at a lower degree. It has almost reached the same level as the first wave of the biggest degree. The peak price of the third wave has broken and crossed the threshold, but the question is, can it be an end diagonal pattern? The current action can expand the size of the third wave to achieve other targets. Now let's take a look at the 4-hour chart. As always, I will count the waves first, and then provide the necessary explanations. The fourth wave was a simple zigzag, and the current market performance after crossing the top of the third wave confirms the extension of this pattern. It can be a leading diagonal that must be corrected within the defined range and then continue, or it can advance as the third wave until reaching the defined targets. The second idea includes changes in the labeling and counting of the third wave, which may also happen in the bull market of this idea. I will analyze the Nifty 50 market in the daily chart to determine if the third wave has been completed. The current third wave has advanced 100% compared to the first wave. However, I believe there may be one more wave left to complete the third wave to a greater degree. To get a clearer picture, I will now move to the 4-hour chart for a more detailed analysis. On the 4-hour chart, I have labeled the 3 cycles as 1 and 2, 1 and 2, and 1 and 2, and identified that the larger degree third wave has been completed. I expect the price action to form a corrective pattern, possibly a multiple zigzag, and complete within the range of 23.6% and 50% Fibonacci retracement. Since the beginning of December 2000, the market has been showing a diagonal leading pattern, followed by a corrective zigzag pattern for the second wave to a larger degree. There is an intense price action in the third wave, which is 300% equal to the first wave in the same degree. The extension within this third wave, which is the fifth wave, is extended. The fourth wave ended near the second wave of the fifth wave, and extended from the third wave of greater degree, between 50% and 61.8% of the Fibonacci retracement. The question remains whether there is another wave left in the bullish market. It is better to go and check more closely in 2 hours. We are currently observing a simple zigzag pattern, where wave C is almost equal to wave A. This could complete the fourth wave, and mark the beginning of a bull market. Alternatively, we may witness a lateral or complex pattern for the fourth wave. The current price action may indicate a zigzag pattern, or an impulse pattern of wave A, or 1, a leading diagonal, and wave B or 2, a regular flat. It is expected that 100% of wave A will advance, and finally 161.8% for the third wave. Breaking the drawn channel will determine whether it can be an impulse pattern to achieve the determined targets. I have conducted an analysis of the Tesla market using the 4-hour chart. In my analysis, I have identified the first and second larger waves, followed by a price action that concluded the fifth wave with a short. This is typical when the third wave is overextended, forming the first wave. The second wave resembles a regular flat. I will now move on to analyze the 1-hour chart. Upon examining the 1-hour chart, I noticed 3 downward movements after the first wave, forming a zigzag pattern, and a double zigzag that ended near the first wave. I believe an impulse pattern will complete our flat pattern and meet the targets we have set. Subsequently, with the price action, specifically the impulse pattern, the bull market is expected to resume. It's important to note that this analytical idea should not be invalidated. In the 4-hour chart of the Amazon market, I have 2 analytical ideas. Firstly, it seems that the first wave has mostly been completed. After reaching the price of $201, we saw 3 waves in the bear market direction, forming a zigzag, followed by 3 upward waves to complete another zigzag. It is now expected that there will be another zigzag to complete the second wave at a larger scale, forming a double zigzag. This is likely to be found within the range of 38.2% to 61.8% of the Fibonacci retracement in the mentioned targets. The drawn channel acts as a green light, and passing through the price of wave B can confirm the extension in the bear market more accurately. The second idea can be confirmed based on the equality of the third and first waves, and the corrective pattern of the fourth wave not entering the territory of the first wave. Additionally, the formation of the 1 and 2 and 1 and 2 pattern suggests that the fifth wave will continue and reach the determined targets in the bull market. it's important to note the price at which the analytical idea would be invalidated. Let's analyze the 4-hour chart of Apple. First, I'll label it. The first and second waves are clearly visible. The next price action forms an impulse pattern, creating the first wave, followed by a zigzag pattern for the second wave, which retraces between 50% and 61.8% of the first wave. It's important to note that the second wave can also take the form of a sideways pattern. Assuming the second wave is complete, we see another impulse pattern and any type of corrective pattern. In a bullish market, after breaking the previous price peak, we can expect the market to act in a similar way and reach the next targets in the future. I will be analyzing the cryptocurrency market on Binance using the 4-hour chart. The first wave pattern appears to be an impulse, while the second wave looks like a multiple zigzag pattern, modified within the 50% to 61.8% Fibonacci retracement range compared to the initial wave. The next anticipated action could be a diagonal leading pattern. Upon completion and correction, we expect a significant price movement to reach our set targets, possibly reaching the highest historical level of Binance. It's important to note that there is a possibility of the price invalidating this analysis. Another possible scenario is a conservative idea, where the first wave to a larger degree may undergo changes in the corrective phase, resulting in 3 waves forming a running or extended flat, followed by 3 waves to reach the targets of the second wave. If the correction goes deeper, it could potentially form a double zigzag pattern. I would like to express my gratitude for your time and attention to this video. Your support is deeply appreciated. If you find the content suitable, I kindly ask that you consider sharing it. For those encountering this video for the first time, I invite you to subscribe to the channel and engage by liking and commenting. Your engagement serves as motivation for the content producer to continuously improve, and I am sincerely thankful for your enduring support. Success is the undeniable right of every individual who diligently pursues their goals, rising each time they fall. Thank you, and goodbye.